Black gold is ripping higher. We've got crude here above $80 a barrel today, up over 6% on 500,000 contracts. And if you've been watching the channel, you've heard me been saying that oil is a good buy here after we've had that 50% drop in the last year. We got to 130 a barrel in March last year, and we got down to 65. We had Warren Buffett buying the dip as well, and I'll get more into that later on the video. Welcome back, everybody. I hope you had a great weekend. My name's Jared from Click Capital, and this is where you're going to get all your latest market data, analysis, and charts. So let's get right into it. So it was pretty mixed out there today. The real standouts obviously were the energy sector, up really big on that price of oil. Also, healthcare had a little pop, and we saw a little bit of pops in industrials. Other than that, it was a bit of green, a bit of red. And with economic data today, we had that manufacturing reads come in, and they are in contracting territory. Now really low here at 46 on the ISM manufacturing and 46 on manufacturing employment. So put it in context, here's the chart of the ISM manufacturing index. So manufacturing is kind of already in a recession. And looking back in history, when you see this level go from high 50s to below 47, 46, we kind of always go into a recession. We saw it there in 2000, back into 2008, quickly into COVID. And we're doing the same pattern again, where we've got up really high after that COVID bounce, and now we come back really low. So manufacturing is contracting. We just need to see that in the surfaces. We've got tighter lending and credit conditions now, and then just more and more data coming in pointing to the upcoming recession. Fear and greed's ticked up to 61 now, so we're starting to get into overbought levels out there, and I'll get more into that on the charts and when can we expect a bit of a short-term top. Options, still a lot of call buyers out there. We've still got those low put to call ratios, and you can see Tesla today, a lot of people buying their dip. We had Tesla off 6% today, 2.5 million contracts changed hands, which is huge. 64% of them calls. Apple a little bit as well. Nvidia, we haven't been seeing the call buying of late, but Amazon and a few others trying to getting some big call readings up there. Dark pools are still hanging in there, supporting the market, but corporate insiders no longer buying as much as they had been. Probabilities of a hike jumped today from 48% on Friday. We're now at 57% chance of a hike in May. Tesla came off 6% today, a bit surprising. They reported first quarter deliveries of 422,000 cars. It was only a little bit less than expected, like 432,000 I think is what they expected. So 2 or 3% worse, and the market pretty bearish. So I think that could be a tell on the stock and maybe the market as a whole as well. So here we see it again, OPEC cutting a million barrels. The oil price had gotten low, had been 50% of its highs for the last year, and we did see crude oil stocks had been increasing of late, and the US dollar did look to be bouncing back. So I think OPEC have got together to try and support their oil price, much against the will of the US and Western governments. And I don't like to get too political on this channel, but just as a trader and investor, in my opinion, foreign policy doesn't look to be working too well in the last couple of years. Now, Saudi Arabia, a huge oil producer, kind of like the leader of OPEC, you could say, have gone against US wishes and kind of siding more with Russia and China as they look to put the squeeze on us Westerners and what we pay at the gas and squeeze us on inflation. This has been the trend for quite a while now. We can see here's a bit of a timeline of cuts, what these countries are doing. And they really want to squeeze us on inflation, and this just makes more money for Russia. China's already signed their own deals with Russia so they can get cheap energy. So what does this mean for us as traders and investors? Well, in the long term, this just justifies and accelerates the switch for Western countries over to clean energy, so we can one day don't even have to rely on these countries to buy their oil. We can use much more advanced clean energy technologies, but in the short term, this is going to put a lot of pressure on the consumer whilst adding to inflation. So a really tough job for the Federal Reserve and governments, and should still be very bullish for the price of oil and energy stocks going forward. The Fed funds was effectively pushed 1.5% higher this week because of tighter financial conditions. So This is an Apollo research saying because of the tighter lending standards, it's equivalent to the Fed hiking 1.5%, which I think is believable because credit will be contracting after what's happened in the banking sector. And here's an interesting chart someone shared on Twitter. It looks like this tulip price index. For those of you who don't know, this was the tulip bubble mania back in the Netherlands almost 400 years ago when they bid up the price of these tulip bulbs like crazy. I've actually got this framed in my office. And someone has said that the SP500 kind of looks like it, and they've kind of annotated that as well, and saying we're right up here. And you see this in a lot of bear markets. We see these rallies and people saying it's over and done. I still think this can happen as well. Of course, we'll let price action decide on that, but I wouldn't be surprised because the market is still well and truly above its long-term mean, and especially when you look at valuations relative to bonds as well. So some people say we'll never see S&P 3000 again. I'm not so sure about that. Okay, so that's it for data today. Over to the charts. So the markets were largely up today except for the NASDAQ, which came off in a bit of an interesting rotation. We've got the S&P at 4124 now. We'll just look at a weekly chart coming up to this resistance zone here. Still got a lot of mess to get through if we're going to clear this out, but we'll come back to this at the end like we always do. And look at micro caps rallying really hard here today. Thought that was interesting. And internationals. So we're still in bullish mode here in the short term. Still a lot of breadth out there, and volatility really low as well. Got the VIX at 18 coming down to this low support zone down there, and move index still holding around the 140 level. There's that put call ratio. Not many people buying puts, still a lot of people buying calls. And breadth, the amount of stocks above their 20-day average, that's getting into overbought territory. This is typically a level where we see short-term tops in the market. So this doesn't look like it has much more further to run. 51% above their 50-day, 56% above their 200-day. So this is the market's kind of deciding whether it's a new bull market or a new bear market. Technically speaking, it's kind of right in the middle around here. And seen a few new stocks making highs today. 50 new stocks on the NYSE, 63 stocks on NASDAQ. But we had those spreads turn. So gross cyclicals came off a bit. Equal weight came down, high beta came down, so did growth and tech and smalls. Had that little bit of a pop in gold today. And something interesting I wanted to show you was developed markets versus America. So this is the EFA, International Developed Markets, and we go out to a 3-month chart. Look at that underperformance. Since they peaked in October 2007, that ratio has come from 0.56 got down to 0.15. So that's been a huge drop. And if we just go to EFA index itself, you can see it's just tracked sideways. It's for over like 15 years now. So this could be turning. And Europe is even worse. Europe itself sold off its ratio against the SPY 0.45 down to 8. So if you can imagine that was a stock, $45 stock down to $8, that's that huge underperformance. So that's a 3-month chart, and emerging markets as well. And if we just go back down to a weekly, they kind of look like they've bottomed and consolidated, and international and Europe especially this year has been outperforming. So a bit of a momentum there in Europe and internationals, especially versus American stocks. I thought it was interesting to point out to you. Yield curves just kind of sitting around there today, not doing too much. Did see high yield come off a bit. The 2-year just hanging around 4%. Could be coming back down to test it, and we've seen that in the 10-year as well, coming back down to this support zone. So with that weaker manufacturing data, that's bearish for the US dollar. So the bond market looking to still be pricing in an upcoming recession, and we'll be watching this 340 level on the 10-year as a big one. September Fed Fund futures creeped higher today, actually 4.8. So that was the market saying there's a bit better chance at a hike actually coming in. That higher oil prices kind of hurts the consumer on their discretionary spending, but it also adds upside pressure to inflation. So treasuries come up a little bit today, high yield come off, a bit of risk coming out of the market there. And the dollar The dollar under attack. It's coming down to this support zone and looking weak. It's that manufacturing data getting weak. All non-Western countries ganging up on the dollar. It does put some downside pressure on the dollar, in my opinion. Bitcoin just can't break out this 29,000 level. Seems to be acting as a pretty good roof here until it isn't. I mean, if the dollar keeps getting weaker, that should add a bit of tailwind to Bitcoin and other hard assets. Commodities moved up. You're hearing me talk a lot on this channel about commodities and how I like it. Gold is in at $2,000 an ounce, near its all-time highs here on this bull flag. Still really like gold. Silver, much the same. Copper consolidating around its 50, and crude. Look at that gap up and held in crude on the volume. Now let's go out to a weekly chart. Got that overhead resistance around 84 a barrel. Another big one at 94. So since we peaked out in March 22, we got that 50% dip over the last year. And seen Warren Buffett, his big picks in Occidental and Chevron. And you heard me talk a lot about oil, and I'm long oil in a lot of my portfolios and for clients as well. I think with what's going on in the world now, with China's just got bigger influence now. Before it always paid a side with America and Western states. They were the big buyer, but now China's a big buyer. They use a lot of energy and raw materials, so they've got huge political and economic sway. And they're roping in all these countries, try and form this new world order and all that, and with Russia. And so they're pulling in Saudi Arabia and others, and I wouldn't be surprised to see oil shoot back up hard above $100 a barrel, especially with geopolitical tensions. This whole Ukraine thing's not going away, and you can imagine when China invades Taiwan, what that's going to do to global supply chains and just people panicking and hoarding. And, China's already worked out great deals with Russia to secure their low-price energy, and Russia and China just going to keep squeezing the West. Long term, the West will not rely on those countries for their energy needs. We'll just use clean energy, obviously, but that's still years and years away. Until then, it's going to be a lot more pain and a lot more price to pay for the dirty stuff. And as small, nimble investors and traders, we can easily position ourselves in these stocks to benefit from that. And overall now, energy sector is still one of the cheapest it's ever been, absolutely, and relative to other sectors. Natty gas, just a crazy market, does its own things. Back down here, still trying to find this bottom on volume here. I think it's probably one of the hardest markets in the world to trade. Agricultural, food, which I like as well for much the same reasons as crude and gold, I think is going to perform as well, and the world will come back to uranium. Especially I think Western countries are going to have to get back to uranium for some of their energy needs, in addition to wind, solar and hydro. Over to the stock sectors today. So a lot of dispersion out there. We've got clean energy off a bit, that's with Tesla. Tech stalled out a little bit, and discretionary semis stalling out there, and saw that nice move up today in biotech. There's the energy sector looking much the same as oil and gas as well. Gold miners just sneaking up, looking to make new highs just the same as gold. Financials tricked up a little bit, but regionals not so much, still flat down here trying to form a bottom. And look at defensive stocks, up 1.56%. So I thought that was interesting that defense stocks went up a lot today in tandem with oil. So this has got the tailwind with geopolitical tensions. And if you just look at a monthly chart, defense stocks are coming up near all-time highs. You believe it or not. Got the SP500 is still a long way from all-time highs, but defense stocks, which I've liked for a while now too, are looking really good here and looking like they're going to break out in the upcoming days and weeks. And look at the defense sectors, like defensive sectors like healthcare, staples and utilities. Look at that move up in healthcare stocks today. That's a pretty good price action. Same with staples. Looks like we could walk the line here on staples, moving up really strong. Utilities above their 50, not as strong today. But if you compare that against the more growth sectors like here's discretionary, retail stocks, and then tech. Well, tech's up there. It's kind of stalling out a little bit. So this price action in defensive sectors is looking like there's a rotation going on to the safer areas of the market by big money. BlackRock Barometer, lower low today, just around its 50. Looks to be sitting there deciding what it's going to do next. JP Morgan, ExxonMobil, rocketing higher on volume here. Apple actually broke out. Microsoft pulled back, as did Amazon. Google just kind of hanging around. Meta hit new time highs. Believe it or not, so did Nvidia, new highs for this year, $280 a share. Really looking for this to get up to 290, 300, so I can short it again, and I think it will be a good risk-reward opportunity. This is one of the only really big high-growth stocks that's approaching its all-time highs, along with First Solar, which is new highs as well, which we're already short. But Nvidia, 690 billion market cap. Last year it made 4.3 billion net income, just a little bit more than what it did 5 years ago in 2018. 2018, we actually got down as low as $30 a share. We're almost 10x that now, but the net income's basically the same. And the last couple of quarters have tricked down. So this market is completely on a hype with this whole AI thing. And I'll show you a few more of those AI meme stocks, which I think can give us a clue of when things have turned as well. AMD, not as high up there, but still in the short term has had a great year so far. Netflix still is trading really strong, and Tesla. So deliveries came in a little worse than expected. I wouldn't have expected the stock to come off as hard as it did today. After we had that great Friday, things were looking really great. It was just kind of a bit of a U-turn here today. A green to red move. So we'll be looking for Tesla to hold its 50 around here and find some support. But if that's all it took, deliveries coming in 10,000 cars worse than expected, if that's all it took and we fall apart here, then that could be telling a bit more of Tesla and the overall market. Coinbase also expect to come under pressure with the government coming after it. It's hard to see how that's going to rally. Meme stocks kind of a little bit up here, and look at Big Bear, 28% today. So retail memes just piling into the calls on these things, and C3 AI breaking out to high highs and high lows today. So I'm watching these AI stocks in tandem with Nvidia to see when we could be coming close to forming a topping pattern on Nvidia. We may get up to 300. I've got a feeling we're either going to get to around this 290, not quite 300, or maybe overshoot 300 a little bit more for a great short up there. But so far the price action doesn't look to be topping just yet, especially when these smaller stocks are kind of like a canary in the coal mine for the sector, if you will. They're still really running, so we might need to see a big crazy blow off top in these AI stocks where everyone's, calling the new paradigm and it's different this time, and these crazy valuations are justified. Because even on this stock as well, look at it, can't stop losing money. It's losing 60 million a quarter. Quarterly sales have actually declined over the last year or so, and it's got a 3.6 billion market cap. So it's just pure hot air that's going to come out of it and crash eventually. Over to the banks, Deutsche Bank holding in there, First Republic, and these real vulnerable regionals just tracking sideways, literally tracking sideways. Just kind of undecided what they want to do in the banking sector as well. Technically, is just finding it hard to get a really good pop here. Just still a lot of heaviness in those stocks. Okay, so that's a bird's eye view at all the categories today. We've got the SP500 at 41.24. Let's look at the global net liquidity model. So we're now more than 100 points above that. So like I said on Friday, we're starting to get into overbought territory here. I'm thinking the SP, we've got at the top of our buy-sell band here at 41.63. I wouldn't be surprised if we hit that tomorrow or the next day. We've got a short week this week with Easter. I think when we either might come up and make a double top, not quite hit 42, or might even overshoot it a bit. And then I think it'll be a good point to maybe tilt a little bit net short again. Even weights are coming back. There's breadth coming back in this market, but like I saw on the 20-day breadth, that's starting to get really overbought up here, so kind of running out of room to move, and we're seeing the growth cyclical parts already turn. That VIX really low can be a contrarian move as well, and NASDAQ kind of stalled out today with the lower high, so I wouldn't be surprised if we can spill over a little bit more, but still no divergence here yet, so maybe a little bit early to call a top. I mean, we could have topped today. If not, I think we're getting near a top, especially we start getting into these 4150s, 4170s, I think should be a spot to top, unless we just rip through on huge volume. Something else, I think if we might get a bit of a topping tail, and if we see that tail where it just kind of pulls back real quickly, that'll kind of be a bit of a telling sign. So that's what I'll be looking for. Till then, I'm still market neutral and very bullish on commodity, gold, oil, and bearish on tech and cyclical. I'm going to keep staying that way for a while. All right, guys, let's hope we have a great week. I'll see you again tomorrow afternoon.